Hello everyone and welcome to your daily market wrap. It was a choppy trading session on Dalal Street today as the investors remain cautious ahead of key global events, particularly the US Federal Reserve policy outcome while digesting domestic Q2 earnings. The BSE Sensex ended at 84,628, down by 151 points. The Nifty 50 closed lower by nearly 30 points at 25,936. Broader market were mixed. The Nifty Midcap 100 was almost flat, down just 0.02%, while Nifty Small Cap 100 inched up 0.02%. So overall, it was a session marked by volatility, profit booking, and sector rotation. On the sectorial front, performance was highly divergent. PSU banks and metal stock were day's top gainer, both rising around 1% each. In contrast, reality was the biggest drag, slipping over 1%. Weaknesses was also seen across IT, energy, financial service, FMCG, pharma, and consumer durable. This clearly shows that trader prefers cyclical and value play, particularly metal and PSU banks, while trimming exposure to high valuation growth sector. Now, let's look at the individual top gainer stock. Include Tata Steel, Larsen and Turbo, State Bank of India, Tata Motors, Kotak Mahindra Bank, and Reliance Industry. Meanwhile, the top losers were Tech Mahindra, Bajaj Finance, HCL Technology, Triton Limited, Mahindra & Mahindra, and Bajaj Finance. In the broader markets, IDBI Bank rallied close to 9% on heavy volumes, nearly its 52-week high. The surge came amid optimism around the government and LIC's divestment plan. Metal counters such as Tata Steel, JSW Steel, and Jindal Steel gained between 2 to 4%, tracking strong global cues after China tightened its steel capacity policy, boosting sentiment for an Indian steelmaker. Suraj Estate Developer is a stock jumped nearly 14% after posting a strong Q2 net profit of 33.1 crore, up by 4%. And in the auto space, Hyundai India's Q2 preview indicate margin improvement driven by a richer product mix and effective cost control. From a technical standpoint, analysis described the Nifty's trend as a neutral to bullish. The index managed to hold firm about 25,800, which now act as a crucial short-term support. A divergent breakout about the 26,000 mark could be trigger a rally toward 26,150 to 26,250. However, if the index slips below 25,800, it may see further weaknesses toward 25,700, even 25,500. Overall, the tone remains cautious, positive, with the trader advised to stay selective and maintain stop losses near key support zone. Market mood was largely cautious through the session, with earlier weaknesses followed by a moderate recovery towards the close. Investors are currently balancing domestic earnings momentum with the global macroeconomic uncertainty. The upcoming Federal Reserve policy decision is a key event risk that may dictate short-term direction. Domestically, traders focused on Q2 result from TVS Motor, Blue Dart Express, and Mahindra & Mahindra Financial Services, which could influence stock-specific move in the coming session. Despite the intraday volatility, analysts believe that the overall structure remains constructive as long as Nifty hold above its 25,800 support. For the tomorrow, market is expected to remain range-bound with a positive bias. Key trigger will include the outcome of the Federal Reserve meeting, ongoing domestic earning announcement, and global cues from US and Asian markets. So, traders are advised to watch 25,800 as a strong support and 26,250 as a immediate resistance zone. Sector like to remain in focus: metal, PSU banks, and selective large cap autos on the long side, while IT, reality, and FMCG could continue to face near-term pressure. To sum up, Dalal Street witnessed a day of consolidation and cautious trading on October 28. The Nifty managed to defend crucial support level with sector rotation favoring metal and PSU banks. As the market look ahead to global central bank cues and more corporate results, traders are likely to maintain a stock-specific and selective approach. That's all for the today's detailed market wrap. Thank you for watching. Stay tuned and invest wisely. Thank you.